Aotearoa, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from Interests.co.nz. And today we lead with news that after more bellicose threats, Trump has backed off hitting Iran as he has signalled. Another taco twist. The region isn't quiet though, but the threatened escalation by the US hasn't happened, not yet anyway. The oil price really hasn't eased back yet on this lull and is holding most of last week's run-up towards $100 a barrel again. Trump's policy twerking has everyone unnerved. Away from that and looking ahead locally, this week will feature the big data dump for the June quarter RBNZ series. We'll especially be watching household deposit growth, which stalled in May. In Australia, it'll be all about Wednesday's CPI release, and expect a small rise to 4.1% there, and Friday's PPI, and expect a rise to 3.5% in that one. In the US, the spotlight will be on Thursday's Fed meeting. Analysts expect no change at 3.75%, even though CPI inflation was at 3.5% for June and rising, remaining well above the Fed's 2% target. Even their PCE inflation was running at 4.1% in May. We'll get their June update on Friday. But in the meantime, financial markets are pricing in more chances of a hike. If not at this meeting, then two by the end of the year. There'll be a lot of other US data out this week, including the second quarter GDP update and the Conference Board's sentiment survey. The week will also feature some big tech profit results. In Japan, all eyes will be on Friday's central bank decision, especially on how they intend to respond to their currency problems. In China, it'll be all about a big set-piece Communist Party meeting. There'll be a lot of interest to see if big new stimulus is announced there. Their PMIs may signal how urgent that is. And over the weekend, Japan's CPI inflation stayed low in June, even if it did rise to a 6-month high. It came in at 1.7% in June from 1.5% in May, but it was its highest since December. The pickup was largely driven by a slower decline in electricity and fuel prices as government energy strategies were scaled back. And Japan's private sector expanded to a 5-month high in July via a sharp rise in manufacturing production and an improvement in their factory PMI, which was driven mainly by the sharpest increase in manufacturing orders for 5 years. And the July PMIs for India came in notably lower than for June, as private sector growth receded and inflation pressure, especially for fuel, intensified. This is putting them in a tough spot with spreading social unrest. Their factory PMI dipped only marginally, but their services PMI registered a notable easing. In the US, the first of the July PMIs shows that business activity growth rose modestly, but to an 8-month high in July, although that isn't especially a high benchmark. However, selling prices rose sharply and at their fastest rate for nearly 4 years. Input cost inflation was at a 14-month high. Their factory sector expansion was little changed, however, from June, with new orders little changed. But it was their services sector that expanded more, although modestly. US new home sales were little changed in June, but maintained the modest level they'd had all year. That makes them 5.6% lower than year-ago levels. And Canadian producer price growth fell back slightly in June from May, but is still 12.4% higher than year-ago levels. Raw material input costs by manufacturers were up more than 20% from a year ago. Meanwhile, the Russian central bank trimmed 25 basis points from its key policy rate, taking it to 14%. A year ago, the rate was 21%. They say they have CPI inflation officially at 6%, although this seems an unlikely level. In the EU, Eurozone business activity has risen for the first time in 4 months in July amid renewed expansion in new orders. Their factory PMI inched up and their services PMI inched up too. But to be fair, these higher levels are not significant and the expansion is minor compared with other global regions. But at least it isn't a contraction. The German version of these PMIs was generally better than the overall set. German consumer sentiment didn't budge, however. In Europe, their ugly heat and worrying fire season isn't easing. In fact, a new wave of extreme heat is forecast over the next few weeks. It is part of an accelerating trend that will likely extinguish European glaciers far faster than anticipated just 10 years ago. Australia also got better new factory order levels in July, the first increase in new business in 5 months. Improved demand conditions underpinned a strong expansion in output, and that led to upgraded recruitment activity, and that enabled higher production of profit margins. This data confirms the good labour market data released recently. But overall, Australian growth is likely to remain sluggish. Sydney, Melbourne and Canberra house prices actually fell in the June quarter, in an unusual but necessary shift to make their housing more affordable. It takes serious political bravery to turn a frothy market where gains just fell from the sky. And bitumen prices are surging again on the closed Hormuz and Red Sea shipping lanes. They're back to levels we had in mid-March, which lasted until mid-June. Interesting though, urea prices are staying low, as are potash prices. But sulphur prices never fell back from the March spike. Naphtha, used in plastics manufacturing, is rising sharply again. The US Treasury 10-year yield is now just on 4.68%, unchanged from this time Saturday, but up 13 basis points for the week. And the price of gold is firm to $4,052 an ounce from Saturday, up $49 for the week. Silver is now on $58 an ounce, down 50 cents from Saturday, up $2 for the week. And oil prices have risen back $1.50 from Saturday, now at $90.50 a barrel in the US, while the international Brent price is just on $98.50 a barrel and up $2. A week ago, these prices were $82 and $88 respectively. Hormuz transits have almost halted entirely. There have been no crude tankers and only one cargo ship exiting over the past 24 hours, and none entering for new loads. The Red Sea is now effectively blocked at Yemen, although a small handful of ships are still getting through, less than 20 each way. Still, almost 800 vessels are awaiting for things to calm down. The Kiwi dollar is unchanged from Saturday at just on 57.9 US cents, but down 50 basis points for the week. Against the Aussie, we're still at 82.9 Australian cents. Against the euro, we're holding at 50.9 euro cents. That all means our trade-weighted index starts today at 61.8, which is unchanged from Saturday, but down 50 basis points for the week. And the Bitcoin price starts today at $64,673 and up 0.7% from Saturday, up 1% for the week. Volatility over the past 24 hours has been low, though, at just on plus or minus 0.5%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. Do this again tomorrow.